Okay, so petty cash. Um, again, this is kind of like a miscellaneous topic, I would say, because it doesn't really exist anymore for the most part. But what it is it's a amount of cash that's like physical cash that's sitting in your place of business that you use for immediate expenses. Okay, so um, what has kind of replaced this? And Chris kind of mentioned it at for his work. What has replaced petty cash for the most part? Yeah. Credit cards, right? Company credit cards, right? So oftentimes there will be a company card instead of cash sitting around because it's easier to account for the card, right? It's going to have a paper trail of every transaction that's used, right? But back in the day, before credit cards were around everywhere, people would keep physical cash. Okay, and maybe some businesses still do. There's probably some use for it still. Um, there's usually some employee that's going to keep track of it, called a custodian, and it's going to be accounted for using this Imprest system, and it's basically a system that is going to track the amount that's in the petty cash account and the expenses, and make sure that that total amount is always accounted for. Okay, so we'll see how this works in a second. So what are some uses? And again, a company credit card is probably more likely for all this stuff, but like cleaning supplies, if you buy flowers for someone, something happened to them, the family member died, entertaining clients, again, why you would need cash, unclear, what kind of entertainment is going on. Um, but usually that's going to be with a card now. Transportation, food for the office, tips. Maybe this one is still kind of relevant, tipping with cash. But really, all this stuff again is moved on to company credit card. Okay, but I still think that this topic is useful because it will help you think about debits and credits and like just see another way that this system is like quite robust and um, can be adapted for many different types of accounting issues. Okay, so I still think even though you'll probably never have to account for a petty cash account, that's worth at least going through the exercise. Okay, so to set up the petty cash account, we have a journal entry. So the situation is on August 1st, beginning of the month, you want to set up $200 of petty cash. Okay, meaning you want to, out of your bank account, go to the ATM, take out $200 of cash, and have it in your office, ready to use for whatever expenses that you're going to need. Okay, so what you'll do is write a check for $200 and make it out to cash. Okay, and then that can be taken to the bank, and the bank will take the money out of your bank account, and they're going to give you the physical cash. It's just like going to the ATM. You can replace this with go to the ATM and take out $200. It's the same transaction. So what is going to happen is that you're going to debit petty cash. So this is essentially a cash account. It's the same as cash, but we're going to have like a sub account called petty cash. And this cash you can think of like the main cash account. This is like your bank account. Okay, so what you're doing is you're removing $200 from your bank account, which is why it's credited, and you're moving it into this physical cash account. Your total amount of cash is unchanged because you're just changing the form of it from bank to physical. Okay, is everyone following this? Everyone good with this? Yes? Okay, so now you've set this up. You have the $200 of cash. Your account is been funded. Okay, your petty cash account. And so now it's going to be like, you can say like sitting in a box, okay? And right now it's like the physical bills, okay? $200. So now whenever you want to use the cash, you're going to fill out this ticket, okay? And let's say we needed $50. You'd say $50. It was for buying food, Okay, debit it to office admin. Okay, office admin expense. Okay, so this is going to say what account is going to be debited, essentially. Okay, what expense account is going to be debited, and then who is receiving the account. So let's say I did. I'll initial, and the custodian also has to sign off. So this is like a control. I can't just go to the box and take the money out. Whoever is like the manager or whoever is going to sign off on this too. Okay, so now what is in the box after this? How much cash is in? 150. So 150 in actual physical cash. And then I have a ticket worth 50. So what is the total between the cash and the ticket? 200, right? So it's still the same. Between the physical cash and the ticket, it will always be $200 theoretically. Okay? That's what this system is trying to do. This $200 is fixed, but the allocation between your physical cash and your tickets is going to change as you use the cash up. Okay? So again, cash plus the tickets is going to always be the fund balance. Okay? Not always though. There's going to be, we'll see what happens if it's not the case. Okay, so yeah, I guess this is the question. Will cash plus tickets always equal the fund balance? Well, the tickets are related, as we saw here, to some expense, right? So eventually you'll see when we refill the Imprest, like when we refill the account, we're gonna do an actual journal entry that is gonna basically put this ticket into the accounting system. Because right now it's just a ticket. It's not. Our accounting system still thinks there's $200 sitting in the account in that box, right? So we'll have to do a journal entry eventually to account for this actual expense. So, and we'll see that in a second. Okay, so uh, will it always balance? I heard someone say no. Yeah, you can like have money taken out of there unauthorized. You can take out, let's say you took out $50 for food. You have the ticket in there, and you come back and you're like, it only cost me 48, and you put the $2 back in, right? So the ticket still says 50, but now you have $152. So that now it equals to $202. Exactly. So there's a lot of room for real world situations to mess up the balance. Okay. So is the mistake always going to make the balance lower or higher or uncertain? It depends on the mistake. What do you think? Yeah, unsure, right? I just gave you an example where the balance went up to 202, right? If I, again, made a ticket for 50, I only spent $45 and I put the $5 back in the box, right? We would have, first, it would have been 150 and $50 ticket. Then the person actually spends 45. So they took 50 out initially, right? But now they're going to put 5 back in. So now I have $155. So I added the 5 back here. But the ticket, unless they went in and changed the ticket to 45, right? If they forgot to do that, then I'm going to have actually 205 in here. So really the correct thing would have been to take this $50 ticket, edit it, and make it 45. Then I would have been okay. But if I forgot to do that, then the balance is going to be wrong. Okay. And then an easy way to think about it being lower is if someone just came and stole money, right? Then it's like I'm going to have less money than I would have. Okay. So it could have been that I took a $50 ticket and then someone came and just took $10 out of here. Then I would have been 140 plus a $50 ticket is equal to 190. So it could be higher or lower. Okay. It depends on what the mistake or whatever the issue was. Okay. So what happens when we want to replenish and kind of actually account for the tickets? So we get to the end of the month. We go in and we physically count. We have $118 in cash. And we have $80 in tickets. So we have two different tickets. We have one for office supplies that we bought, and then $20 for a delivery expense. Okay? So when we add this up, 118 plus 80, we see that we're actually not at our $200. So we had something happen here. That was a mistake. Maybe someone took out $2 and forgot to make a ticket. Something happened. Okay? So for the time being, we're just going to do a journal entry to kind of account for what we do know. So we can see here we have an adjusting entry. We're going to debit office supplies, which is what? What kind of account is that? It's an asset, right? So because we bought these office supplies, we have this new asset worth $60. Delivery expense is an expense account, also debit. Cash short and over, because we need this to balance, okay? We know that to get this $118 back to $200, we need to go to the bank and get $82, right? So that's where this cash is coming from, right? Does everyone agree with that? So you start with actual how much cash you have. You know what the balance should be. You know how much you need to go to the ATM and get. You know that exact amount because you went in and you counted how much cash there was. So this is kind of clear. This is clear, and this is clear. Now, to make it balance, you're going to have to use this account called cash short and over. And as the name implies, it could be short or it could be over. In this case, we were short, right? We didn't have enough. We were $2 short. So when it's short, it's going to be a debit just to make this journal entry balance. If we had too much money, right? Let's say we had, instead of $118 in cash, we had $120 or $122 in cash, right? We would have had $122 in cash, $80 in tickets. That means we would have had $202, which means we would have been $2 over. Basically, how that would have changed our journal entry, we would still have the same thing. We would have office expense or office supplies. Sorry, let's shorten that to office supplies, $60. We would have had delivery expense, 20, because those were tickets that we had filled out. The cash, though, how much cash do we need now? We had, instead of 118, right? I'm just kind of changing this. I had 122. So how much do I need to go to the ATM to get it back to 200? 78, right? Right? 78 plus 122 is 200. Okay, so now what do I got to do to make this journal entry balance? Do I need a debit or a credit? I have $80 of debit and I have $78 credit. So I need $2 credit. Okay. So again, it's going to depend on the situation. If this cash short and over is a debit or a credit. Okay. At some point, you'll have to figure out what this is because this account needs to go to zero. So let's say we found out that, hey, the cash was actually, the delivery expense was actually $22, right? So what we would do, so right now, delivery, right now it's at 20, should be 22. So that means we need to debit it $2 more. So what we would do is basically debit delivery expense $2. And okay, and this was with the original, this journal entry here, right? Where you had this debit balance. So you originally, so after you do this, this will go to 22 as we wanted, cash short and over. Started with the $2 debit balance. We're crediting it to, this goes to zero. Okay, because you want this cash short and over at the end of the period, you need to figure out where that money went. Okay, so this should be 0. You need to do some work to figure it out. You have to do some investigation. But the goal is eventually to kind of fix whatever the issue was and get this to go to 0. Because right now in this journal entry, it's kind of like a placeholder. There was some mistake made. You need to fix it. Yeah, you would have to have some expense for that, some shrinkage like we had for inventory. It'd be the equivalent of like administrative shrinkage, it'd be some expense though. You'd have to take a lot. It would reduce your net income by however much was stolen. Now, look, one thing I'll point out is that if you look on the replenishment, there's no mention of the petty cash account. We use the petty cash account up here to set it up. And after that, the balance is always going to be 200. We're just going to now replenish it using whatever expense accounts that we got to account for, and then just going and taking out more cash. We would only use the petty cash account again if we wanted to increase the balance or reduce the balance.